Okay, so good evening, everyone. Today we are doing paper 13, especially the questions from incomplete records. Right, so today's session, I'm focusing some of the past paper questions from incomplete records. Right, in our theory class, the revision class, and also uh, in our revision class, we have done 2 sessions. So in that, we covered mainly the calculation, profit calculation, and preparation of financial statements in incomplete records. Right. So today, I'm focusing on some MCQ questions related to this chapter. Right. So I'm going to start with question number 3 onwards. Right. So these 2 questions I have already done in the class. Right. So if we have time, we will do these 2 again. Let's start from 2013 part 1, question number 14. So this is a past paper question from 2013 A level paper. Right. Okay. So let's do this question. Question number 3. The entire inventory of a company held at 31st March 2013 was destroyed due to the flood. The following information is provided for the year ending 31st March 2013. It is the policy of the company to sell goods keeping a markup of 20% on cost. So you have to clearly understand an important thing related to markup, markup and margin. Right? Markup means it's on cost. Right? On cost. So cost is 100. On cost, we calculate the profit. Margin means on selling price. Margin means on selling price. Right? So selling price is 100. Based on the selling price, we calculate the profit. Right? So here they have said on cost. Markup on cost is 20%. On cost, it's 20%. What is the value of inventory destroyed as at 31st March 2013? Right. So the easiest way to calculate this, right? The easiest way to calculate this inventory destroyed is by preparing a trading account. You have all the information which is relevant, which is given for trading account. So this is the closing inventory. Like the entire inventory means the closing inventory. You need to find the closing inventory of this business. Right. So let's record whatever the information that they have given. Inventory as at 1st of April 2012. That's the opening inventory, which is 1,500. Which is 1,500. Then we have purchases, 3,500. So that will be added to the opening inventory. Purchases return will be deducted. Purchases return will be deducted from the purchases. That's return. Then the sales value is given. Sales 4,800. Purchases return, sales. Selling expenses, that won't come under the trading account. This is income statement under distribution expense. So we don't need to consider this distribution expense. Selling expense will not be considered for the gross profit calculation. But in most of the questions, what they do is they give an extra transaction. So to confuse you, so don't get confused. Don't take these values. What is the value of inventory destroyed? So we need the closing inventory. I'll give 2 minutes. Can you tell me how much is the closing inventory? Markup is 20% on cost. So markup 20% means 20% on cost. Right. So on cost means cost is 100. Profit is 20. Sales value is 120. Right. Sales value is now 4,800. And how much is the cost of sales? What is the gross profit? And can you all tell me how much is the closing stock? Tell me the value of closing stock. Right. So there is a question. So if the closing stock is destroyed, aren't we reducing it from the purchases? Yes, that is the amount. Now, closing stock only we are finding. That entire amount is destroyed. Right. So once we calculate the closing inventory, we can take that entire amount as the stock destroyed. the inventory destroyed. It will affect the statement of financial position. Yes. What is the closing stock? What is the value of inventory destroyed? Now the sales value is 4,800. So this is 4,800. Sales is equals to 4,800. That means 120 is equals to 4,800. Okay. Then how do we calculate the cost? Cost is equals 4,800 is equal to 120, and we need the cost. So 100 over 120. Mm. 4,800 is equals to 120, right? Then multiply by 100, you will get the value of cost of sales into 100. $4,000. So cost of sales is 4,000. Cost of sales is 4,000. Right, this is 4,000. Gross profit is 800. We don't need the gross profit. We need the cost of sales. So if the cost of sales is 4,000, how much is the closing inventory? So let's take the balance here. It's 4,500, and out of 4,500, if you deduct the closing inventory, you will get the cost of sales as 4,000. So how much is the closing inventory? What is the closing inventory? Closing inventory is 500. So if you deduct 500 only, you will get the answer as 4,000. So the answer for this question is 500,000. So by preparing a trading account, you can easily calculate the answer. So one of the key point here is gross profit or markup margin calculation. So I have done several sessions on this. If you have more doubts, you can just go through those videos which is uploaded in the YouTube. I will share after the session. Any other questions, the doubts? Okay, so let's move to the next question. Question number 4. Question number 4 is 2012, part 1. In first paper, during the year, the assets of a sole trader increased by 400,000 and the liabilities increased by 500,000. If the profit for this year was 250,000, how much additional capital was introduced by the owner? Right. What is the answer for this? How do you calculate? So you calculate the answer for this by using the equation for the profit equation. Right? The profit or loss equals or we can use the equation assets equals equity plus liabilities. We can use this equation. From the profit equation, we will use this. Asset equals equity plus liabilities. Right. Can you all tell me the answer for this? The assets increased by 400,000. Assets increased by 400,000. Liabilities increased by 50,000. Right. Then what is the equity? Equity is 350,000 because equity is equal to asset minus liabilities. Right. So you get the equity. Out of this equity, 350,000. Out of this equity 250,000, if the profit is 250, this is the profit, then the additional amount is the capital. So we can say additional capital is 100,000. Additional capital is 100,000. Right? If asset increase by 400, liability is 50, difference is the equity. So the equity will change due to three reasons. One is profit, other one is additional capital, and drawings. So here there is no drawings, only profit and additional capital is free. Right, so here in this question, we don't need the net asset equation. We can simply do it from the basic accounting equation. Right. They have not given the net asset, they have given the assets and liabilities. That's why I didn't use the net asset equation. Okay. Right. So let's move to question number 5. So this is also another past paper question. 2012. Right. Amal Traders lost its entire inventory as at 31st March 2012 due to a fire. Entire inventory. So that's the closing stock. Closing stock is destroyed due to fire. The information available on that day is as follows. Inventory as at 1st of April, purchases and sales. The firm's gross profit margin on sales is 20%. So this is also a similar question that we did earlier. What is the value of inventory destroyed due to the fire? Okay, I'll give 2 minutes. Can you all do it? There is a question. So can you please explain the net profit and gross profit? Gross profit means sales minus cost of sales. Gross profit means sales minus cost of sales. Net profit means from the gross profit, you add other income and deduct all the expenses. Right? Take 2 minutes and do it. I will give a brief explanation on the question which you asked. Okay, look at this. So this is how you calculate the profit. Now there was a question to explain the net profit and gross profit, right? So see this calculation. Now income is mainly divided sales and other income. The main income of a business is sales. So sales means the net sales. Net sales is calculated sales minus return inwards. And the main expense of the business is cost of sales. This is actually the purchases. So cost of sales is calculated using this equation: opening stock plus purchases minus closing stock. Right? By taking the sales and the cost of sales, we calculate the gross profit. And we add other income and deduct all the expenses, administration, selling, finance, other, then you will get the net profit. Okay, so this is how you calculate the profit in the business. Right, so let's move to our question. What is the answer for this? So I'm using the same format which we used earlier to calculate the closing inventory. Opening inventory is 200,000. Opening inventory is 200,000. Purchases during the year is 1,500. Sales is 2,000. Gross profit margin on sales. So you can use this calculation. Gross profit margin on sales is 20%. If the sales is 100, now this is different. On sales, the previous one was on cost. Now this one is on sales. So if the sales is 100, profit is 20, cost is 80. right? Then the sales value is given as 2000. Sales is given as 2000. Now how do you find? Right? So this is 2000 into 80 divide by 80 divide by 100. 2000 that is the answer. 2000 into 80 divided by 100 is 1600. So the cost is 1600. Cost of sales is 1600. Gross profit is 400. Right. Now let's calculate the closing stock. Closing stock is what is damaged. 100,000. So there were 1.7 million stock, 1,700,000 stock. And the cost of sales is 1.6 million. That means stock destroyed is 100,000. What is the value of inventory destroyed due to fire is 100,000. Right. Next. What is the net impact on total assets of the company as at 31st March 2012 if an insurance company agreed to indemnify 80% of the value of the inventory? So the insurance company says that they will pay 80% of the destroyed inventory. So how much is 80%? 80% is 80,000. So only 20,000 will be the expense. Only 20,000 will be the expense. Now let's see uh, impact on total asset. Right. So if you draw the equation, if you write the equation, asset take the equation here. Assets equals equity plus liabilities. So this is the equation. right? What is the net impact of total asset? So if the stock is destroyed, double entry for the stock destroyed is, now since 80% we are receiving, insurance receivable account will be debited by 80,000. I'm writing the double entry for this. And the stock loss account, which is in the income statement, will be debit 20,000. Stock loss account, other expense. And stock account or purchases account will be credited 100. Purchase account will be credited 100. So this is the double entry. What's the impact to the asset? Right. So purchases reduced means asset is reducing here. Purchases means stock. Hundred. Asset is reducing by 100 and stock. And insurance receivable. We are getting insurance 80. Insurance will be received for 80,000. Therefore, the equity loss is 20. So this is the entry for this stock loss. So what is the net impact on the total asset? Net impact is only 20,000 minus 20,000 is the net impact of asset. Minus 20,000 is the net impact of the asset. And even though 100,000 worth of stock is damaged, we are getting 80%. That means only 20,000 is our loss. So that 20,000 is transferred to the income statement as stock loss under other expenses. So we'll move to question number 6. There's a doubt. What is the equation if the gross profit margin on cost of sales? On cost of sales, we did now. Question number 5 is on sales. So sales is 100, profit is 20. This sales is 100, profit is 20. We did question number 3, which is on cost. So cost is 100, profit is 20, right? Two questions. Now let's move on to question number 6. Question number 6. Right. So what do we have? What was the profit earned for the year ended 31st March 2010 based on the following information of a sole proprietorship? Equity, total assets and total liabilities, 31st March, equity is 1st of April. Right. Now here we use the net asset equation for profit calculation. Right. So this is the equation in order to calculate the profit. Profit equals closing net asset minus opening net asset plus drawings minus additional capital. What is the answer? Can I have the answer for this? And it's a very simple question. Closing net asset means asset minus liabilities. Year end total assets were 800. Total assets were 800 at the end of the year. Liabilities were 200 in the year. And the opening net asset is 500 plus drawings 30,000, and there is no additional capital. There is no additional capital. So if you solve this, answer is 130. Answer is 130,000. Right. Question number 7. Question number 7. The following information relates to Amila Traders. Total assets, total liabilities as at 31st December 2018 and 1st of January 2018. Opening and closing assets and liabilities. Drawings 40,000. Assets as at 31st December 2018 include stock costing 50,000 which was sold but undelivered to customers. What is the net profit or loss? Can you all calculate the net profit or loss from this? Oh, sorry. Mic was muted. Right. Right. So 50,000, there is a stock which is already sold but undelivered, which is in the closing asset value. So that has to be deducted from the total assets as at 31st December because it has been already sold. That's actually the total asset value is 700,000. Now let's calculate the net profit. So what is the equation? Net profit, use this equation. Profit equals closing net asset. Closing net asset means 700 minus 350. Asset minus liabilities. Opening net asset is, how much is opening? It's 500 minus 200. 500 minus 200. Borrowings plus 40,000. Plus 40,000. There is no additional capital. So 700 minus 350 is 350. 300 plus 40. It's 90,000. Answer is number 3. 90,000. Question number 8. So we are doing question number 8. A fire took place in the stores of Ravi Traders. A fire took place in the stores of Ravi Traders on 31st March 2019. End of the year. Completely destroyed part of its stocks. The cost of remaining stock was 50,000. The following information is also given. Cost of stock 1st of March 2009 was 300,000. Sales made during the year 150. Gross profit on cost of sales 25%. No purchases were made during the year. Calculate the cost of stocks destroyed. How do you calculate? Right, so we can prepare a trading account for the month of March. Trading account for the month of March. So I'll use the same format of trading account. completely destroyed. The remaining stock is 50,000. Remaining stock is 50,000 means that's the closing stock. Remaining stock, which is 50,000. Cost of stock 300,000. Sales made during the year is 150,000. Sales is 150,000. There is no purchases. Right. So they are asking us how much is the stock destroyed. So stock destroyed stock damaged, it will be deducted here. So we need to find this value. Gross profit margin is given, so we use the same equation. Same equation. %25 on cost means cost is 100, profit is 25. Cost is 100, profit is 25. Sales is 125 on cost of sales. There is a question, is it a trading account is income statement? Yes, trading account is the upper part up to the gross profit calculation in the income statement. Gross profit calculation, that is trading account. Below that, it's profit and loss account. Right. Now we have the equation for gross profit, 25%. Sales value is 150,000. So if the sales value is 150,000, if the sales value is 150,000, how much is the cost of sales? Now let's calculate. I'll use this formula. 150,000 is equals to 125, and we need how much is per 100. What is the answer? 150,000 divided by 125 into 100 is 120,000. So that's the cost of sales. Gross profit is 30,000. Now what is the stock damage? Can you all tell me the answer? What is the stock damage? Stock damage. So that is the minus figure. So this amount is 170,000. Because 170 minus 50 is 120. So that's the net. So stock damaged is how much? Part of the stock is damaged. That's the difference. 170 and 300. 300 minus 170. 130,000. That's correct. So we had 300, 130 was destroyed, remaining 170. Oh, sorry, left. Yeah, remaining 170. So the closing stock is 50. Cost of sales is 120,000. Next question, question number 9. The Columbus Sportswear Company lost the entire stock as at 31st March 2008 due to a fire. Right? The Columbus Sportswear Company lost the entire stock as at 31st March 2008 due to a fire. The following information was available on that date. 1st of April stock is 100,000, purchases 600,000, sales 1 million. Gross profit margin on sales is 45%. What is the value of stock lost due to the fire? Similar question. So can you tell me the answer to this? I'll take the format. So entire stock is damaged. What is the answer? Sales is 1 million. Opening rent is 100,000. Purchases 600,000. On sales 45%. Right. So let's type this. On sales is 45%. If the sales is 100, profit is 45, cost is 55. Now the sales value is 1000. That means cost of sales is 550. Cost of sales is 550. This is 400. So the total amount of the inventory is 700. 550 is the cost of sales. That means closing stock, which is destroyed, is 150. 150 is the closing stock. Well done. Question number 10. Now, up to now, we did questions from the A-level past papers. There are some questions which is not relevant for our syllabus. I have taken this question from chartered revision kit, new syllabus revision kit. Okay, so let's do a few questions related to this. Right. Question number 10. Okay, question number 10. Can you find the answer? Business has compiled the following information for the year ended 31st October 2002. Opening inventory, purchases, closing inventory, gross profit as a percentage of sales is 40%. What is the sales revenue? Can you tell the answer? What is the sales revenue? Right. Can you tell me the answer for this sales revenue? Sales is what we need. %40 of sales. %40 of sales. The sales is 100, profit is 40, cost is 60. Opening inventory 386, 200. Purchases 989,000. Closing inventory 422, 700. 422, 700. Here the total is so cost of sales is 952,500. 952,500. How much is the sales? Right. So cost is 952. How much is sales? right? So we can calculate using this. $952 952 into 100 divide by 60. $952 is equals to 60. Then we need the value for 100. Sorry, it's 952 500. Right. Yes, sales revenue and sales is same. There is a doubt question. Sales revenue and sales, is it same? Yes. Revenue, sales are same. Turnover also sometimes we fall for the same thing. $952 comes from this 100, and this is the total opening inventory and purchases minus closing stock is cost of sales. This is cost of sales. Cost of sales is 950 to 500. If the cost is 950 to 500 and the profit markup is 40%, then by using the equation we can find out the sales value. So sales value is 1,587,500. Okay. Question number 11. Which of the following calculations could produce an acceptable figure for a proprietor's net profit for a period if no accounting records has been kept? Right. What is the equation? What is the profit calculation equation? Right. So closing net asset plus, answer A. Closing net asset plus drawings minus additional capital minus opening net asset. So answer is A. It's not a hard one, it's a simple one. Closing net asset minus opening net asset plus drawings minus additional capital. Question number 12. A sole proprietor fixes his prices to achieve a gross profit percentage on sales revenue of 40%. All his sales are for cash. He suspects that one of his sales assistant is stealing cash from sales revenue. So one of the sales assistant is stealing cash from the business. Recorded sales revenue, cost of sales, gross profit, assuming that the cost of sales figure is correct. How much cash could the sales assistant have taken? Right now we will sales minus cost of sales is gross profit. Sales minus cost of sales is gross profit. Okay. Right. We use this equation. Now the profit ratio is on sales 40%. If the sales is 100, profit is 40, cost is 60. Right? And according to the question, assuming that the cost of sales figure is correct. So cost of sales is correct, 114,000. If the cost of sales is 114,000, how much is the sales? If the cost of sales is 114,000, how much is the sales? Now we calculate that. $114,000 multiplied by 100 divided by 60. 114,000 equals to 60. So divide by 60, multiply by 100. So you can find out the sales, actual sales. Therefore, actual sales is how much? 114,000 divided by 60 multiplied by 100 is 190,000. Right? Recorded sales actual sales is 190. Recorded sales 181,600. That means the sales assistant has taken money from the business. How much he has taken? That's the difference between these two. He has taken 8,400 from the business. $1,400 is the cash stolen from the business by the sales assistant. Right. Question number 30. Deepa does not keep proper accounting records, and it is necessary to calculate her total purchases for the year ended 31st January 2003 from the following information. Trade payables, payment to suppliers, cost of goods taken from inventory by Adipa for his personal use, refunds received from suppliers, discounts received. Right. Can you give a try to calculate the answer for this? Right. So how do you calculate the cost of sales? Use the trading account. So let me take the format. What is the figure for purchases that will be included? What we can do is we will prepare a trade payables account. Since they have given the trade payable details, let's prepare a trade payables. Right? Okay, so opening balance, trade payables are credit. Opening balance is 130,400. 130,000. In the closing balance, which is given for 31st January, balance carried down 171,250. 171,250. Payment to suppliers, cash account credit. This is credit 888,400. Then what do we have? We took the opening balance, closing balance, payment to suppliers, so this doesn't come to the trade payables account. Refunds received from supplies, refunds received. Discount received will be debit. Discount received will be debited. 11,200. Purchases. So we have these two new items. Okay, now this is actually without preparing the trade payable control account. What I will do is, now since there is a stock drawings and the refunds, we will prepare a control account. It's called purchases control account. And similar to the trade payables. So I'll take these two transactions also into the purchases account. Right. So let me explain the remaining two. So you know all these other transactions because you have done the control accounts. Okay. Now there are two more transactions. Cost of goods taken from inventory by the Adipa for his personal use. So 1,000 has been taken from the owner. So that's drawings. Drawings account debit. The purchases account will be credit. Right? So that will be credited. Goods taken. Goods drawings. Goods drawings 1,000. So that will be credited. Now there is another transaction. It's a new transaction. Refund received from suppliers. So we have pay now. When we pay for the supplier, cash credit, purchases the supplier's account will be debit. If they refund, if they pay back to us, then again our cash balance will increase and the payable account will be credited. Refunds. Surplus. That will be credited. Refunds will be 2001. Now what is the purchases? Purchases will be the difference in this account. $937.50. Purchases account and purchases control account are these two different accounts. Now, this is also a purchases account only, right? But since there are other transactions, we make it a control account. Control account. Both are same. Purchases, control, both are same. We just use a control account since there are other transactions. Since we are taking other transactions into this, like salary control account. Salary 37,050. Net asset as at 1st January. Drawings, capital introduced, net asset closing. Based on this information, what was the profit? Okay, shall we calculate the profit? Use the profit equation. And here we have the profit equation. Question number 14. Profit equals closing net asset is 400,000. Opening net asset 210,000. Drawings 48,000. Capital introduced 100,000. What is the answer? $400 minus 210 plus 48 minus 100. 138,000. 138,000. It's 138,000. right? Question number 15. Alpha is a sole proprietor who does not keep proper accounting records. Alpha is a sole proprietor who does not keep proper accounting records. Alpha's first year of trading was 2004. From reviewing Alpha's bank statement, following summary has been compiled. Bank and cash summary. Cash received from credit customers and paid into the bank. Expenses paid out of cash received from credit customers. Credit customers means debtors. Before banking, 6,800. Cash sales. Other information. Recoverable debt. Discount allowed. Closing balance of trade receivable. Which of the following correctly represents Alpha's sales figure? Right. Shall we calculate? We can prepare debtors control account. Yes. Similar to this. Trade receivable control account. Trade receivable control account. So in that, we'll record the transactions. This was started in 2004. Therefore, there is no opening balance. Closing balance is given 0. There is no closing balance as well. Then we have cash received from the customers, 381,600. 381,600. So this is the total cash received from the debtors. 381,600, which was banked. Another 6,800, which was paid for the payments. Then also we have recoverable debts. Bad debt. Debtors account credit 7,200. Discount allowed. Discount allowed 9,400. So difference will be the credit sales. Credit sales. So let's find the credit sales first. How much is the credit sales? So total 405,000. 405,000. So total sales means cash sales plus credit sales. Total sales equals cash sales plus credit sales. Cash sales is given 112,900. Credit sales we have calculated from the debtors control account 405,000. 112,900 plus 400, 517, 900. 517, 900 is the total sales. Question number 16. On 1st of September 2006, on 1st of September 2006, a business had inventory of 380,000. During the month, sales total 650. On 30th September, end of the month, a fire destroyed some of the inventory. The undamaged goods of inventory were valued at 220. The business operates with a standard gross profit margin of 30%. Based on the information, what is the cost of inventory destroyed? Can you do this? Let's prepare a trading account. On 1st of September, inventory was 380,000. During the month, sales total to 650. Purchases 480. Right. Okay. Then we need damaged stock. Damaged. Control 2 lines. So this is what we need. Damaged stock. Business operates with a standard gross profit margin of 30%. So let's take the profit margin. %30. Margin means on sales. Margin means on sales. If the sales is 100, profit is 30, cost is 70. Now the sales is 650. Cost means 650 divided by 100 into 455. Now find the damage stock. This is 675 and 185,000. 185,000. Okay. Now there are two more questions. Actually, I will explain last. Right. So let's read the question. Vishwa started a trading business on 1st of January 2016, investing 1 million as capital. So he has invested 1 million as capital. He spent 90% of this amount to purchase goods and sold them with 30% markup on cost. The assets of the business as at 31st March, there were no additional capital or drawings made during the year. Right, so the requirement is calculate the profit and operating expenses. Right. So let's find out the profit. Vishwa has invested 1 million and he spent 90% of this amount to purchase goods. So 90% of this is 900,000. If the cost is 100, profit is 30, sales is 130. That's the rate. Then the cost is 900,000. Since the cost is 900,000, how much is the profit, or how profit will be 900,000 divided by 100 multiplied by 30 is 270,000. Profit is 270,000. Right? Now they are asking the operating expenses. Operating expenses means after the gross profit, if you deduct the expense, you get the net profit. So since they have given net asset details, we can find out the net profit. Net profit means closing net asset minus opening net asset plus drawings minus additional capital. So closing net asset was given 1,200, 1.2 million. Opening net asset is given. Opening net asset is given 1 million, 100,000. Gross profit is 207,000. Gross profit is 207,000. Net profit is 200,000. Net profit is 200,000. Then how much is operating expenses? Operating expenses is 70,000. And so you need to follow these steps. First, find the gross profit, then find the net profit. Then the difference is the operational expenses. First step, find the gross profit. Second step, find the net profit. Third step, find the operating expenses. Right, so calculate the following. Profit is 70,000. Gross profit is 27. Is GP. Right. So one last question. Uh, 2015. Sumudhu has commenced a business on 1st of April 2014, investing 500,000 in cash. During the year, Sumudhu provided 200,000 worth photocopier for the business. And withdrew 50,000 from the business as drawings. The business earned profit of 120 during the year ended 31st March. State two items that contributes to increase the equity of the business. So here there are two items which increase the equity. One is the investment. Then the second question, what is the net asset of the business as at 31st March? So net asset will be calculated using this formula. Opening capital is 500,000. There is an additional capital provided, 200,000. Net profit earned is 120,000. And borrowings is 50,000. The closing of asset. 500 plus 200 plus 120 minus 50. 707,000. Okay. So we covered all the questions from the paper 13. Right. Okay. So tomorrow in our revision class, I will be discussing the new chapter, non-profit organizations. Okay. So we'll conclude the session from this point, and I'll see you tomorrow at 7 p.m. in our revision class. Right. Refer your past notes and so it will be easy for us to continue. Okay. So good night and take care.
Thank you, sir.